Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of global financial update. Now, folks, the speculations around the potential trade deal have kept the FX market on the uncertain run. Further appreciation in the Taiwanese dollar was observed, making it one of the best performing currencies since the Liberation Day announcement. And so has been the appreciation in a lot of Asian currencies. Even INR has enjoyed this sort of move in the Asian. We also saw a big move for another outperformer yesterday. It was the gold, which rallied from USD 3,240 per troy ounce, approximately, to now trading around USD $3,375. So these kind of moves have also been observed. Other than that, on the policy front, ECB member was also found giving statements regarding the continuance of their rate cut cycle. So, JK, what are your thoughts around such updates and what should we be seeing in the markets?
Hey, good morning, Shikhar. Yes, after the big moves of Friday, I think the attention was mainly on Asian currencies yesterday, and they did move further, uh, helped by Chinese yuan that saw the dollar trade below 7.20, in fact, below 7.19 even. Taiwanese dollar was the major focus, and it gained again despite attempts by Chinese authorities to play down the appreciation. Now, apart from giving certain reasons why Taiwan dollar was appreciating, they did not uh, announce any measure to stop the appreciation. So, market took it as a green signal to continue selling the dollar, and that had its own impact on other currencies as well. Yes, on the rupee, again, having traded below 84 on Friday and then bounced. Yesterday was a day to check whether the market goes below 84 once again, but that was not to be because of two reasons. One, national banks were seen buying again at the low near 84.15, and there were also some import covers that was happening, and the move so far was seen quite swift in the last few days. There was some hesitancy by general market, even exporters, to sell at these levels, and that actually gave some support to the dollar. And now awaiting, in fact, China was also closed yesterday. Market also wanted to see how the Chinese, behave when they open after a long period of holidays. Yes, they did open today with some weakness on the yuan. I think Chinese authorities are more firm on keeping their currency's strength in check, while the negotiations are yet to start on the tariffs. So bounce in the USD offshore yuan from 7.19 to 7.23 has been seen, and that has also supported the dollar against a host of other Asian currencies. Even USD INR is indicated to be trading at around 84.35 in offshore trades. Yes, now we'll of course, there will be focus on more US data, more statements on tariff negotiations, and also the Fed in the coming days. Yes, we did have some statements from the Treasury Secretary Besant. They said they are very close to some deals. President Trump, in fact, had told the previous night that one of them, the tariff deals may come as early as this week. So market's anticipation is very high on this. And Secretary Besant also made some statement that the tariff, tax cut, and deregulation agenda will all work together in the long term and make US the best destination for investment. Although market could face some short-term turbulence, which is what we are seeing right now. But that is not enough for rebuilding the confidence. Right now, market is quite sedate on these comments, and continues to favor a short position in the dollar. And even though even euro dollar attempted to break 1.1275 once again, but failed and bounced back above 1.13. And as you said, gold buying, as even as Chinese re-entered after a holiday, is a very clear indication that dollar is not out of the is still out of the favor, and market continues to find one pair or the other to express their short dollar stance. What we've seen over the last few months is gold was the first one to rally, and then we saw the developed market currencies like euro, yen, and GBP, along with the Swiss franc gain, also as safe havens. And then the stand shifted to the emerging market currencies, like the Asian EMs and also some of the Latin American currencies. Now, as the Chinese returned, we see the gold taking one more cycle of gains. So I think it takes much more than mere statements from the US authorities to stabilize the dollar from falling further. But in the technical picture, the dollar does not look too good. I think market is uh, having a stance to sell the dollar on any recovery. That's what we said. Yesterday, we did have some data on ISM services from US, and of course, that gave some reason for short-term players to take profit on the shorts on the dollar, because ISM services index beat expectations coming at 51.6. Good thing was that apart from prices jumping, we also had new orders hit a very high level, and that was at 52.3 versus 50 forecast. And the employment component was also quite good, quite contrary to many of the indicators on employment that we had seen last week. So that provided some short-term recovery for the dollar and also for the stocks, but eventually stocks have also ended on the negative side, because the US stocks has had a 9-day of rally, and normally any market that rises continuously for more than 8 sessions does see some profit taking or short-term reversal. That's what we are seeing right now. Yes, now the focus turns to Fed. They have had a lot of inputs on the economy. Of course, the tariff things are still going on. They do not know where the tariffs will settle, and they will have to make an assessment whether the economy is weakening enough to overlook the inflation impact and take a slightly dovish stance. In any case, there is going to be no cut in the rate tomorrow. Even the probabilities of cut in June have now dropped to 37% from around 64% a month ago. And for the full year also, from 4 cuts, the market is now discounting only 3 rate cuts. That's the kind of movement that we have had on the market expectations on the rates. Yeah, I mean, this is also a busy week for many other central banks. Apart from Fed, we have Bank of England meeting on Thursday, expected to cut rate by again 0.25%. Sweden, Norway, the Nordic countries, central banks are also, meeting on the policies. And in general, what we have seen is that most of the central banks, other than Fed, are taking a very cautious approach and perhaps leaning towards supporting growth in view of the challenges that is posed by the new US government policies, and particularly the tariff. And they prepare themselves for the upcoming slowdown, which is very imminent if the tariffs go ahead. At least the tariffs are very much likely to go ahead. With what percentage is the only speculation right now. So I would see the market today. We don't have much of a data apart from the international trade data for April. Advance estimate, and that's likely to show a big drop from 160 odd billion to around 120 billion. That is because March number was boosted by pre-tariff stockpiling imports, and that has actually ended now, and now we are back to the normal month. So that should not make any difference to market's assessment of where the trade deficit is moving. It remains at its average level. So not much reaction can be seen towards it. So perhaps today we have a rangy market. Of course, Chinese returning, and even UK coming back from holiday is likely to improve the liquidity, and we could see some moves in the treasuries, which are extremely range bound yesterday, and then market prepares itself for facing the Fed statements tomorrow. Thank you.
Okay, JK, that was really good. And yes, folks, we should expect some sort of rangy market, although A lot many major economies have resumed after a long weekend. But it's quite interesting as to how the focus has shifted towards what is being expected out of the FOMC meeting tomorrow. Though no rate cuts are being expected, and even the rate cut probabilities is seen shifting for the year, we have also observed the central banks other than the US are also being cautious, looking at the uncertainty and the possibility of an imminent slowdown in case the tariffs are announced in a heavier manner. So these central banks are leaning towards a position which is more of supporting growth right now, considering the uncertainty. On the other hand, Trump was found hinting on the possibility of a deal as early as this week, while Chinese authorities uh, have been observed to be more keen on keeping the currency strength in check, regardless of the kind of move we've been observing for the Asian currencies. On the domestic front, for the Indian rupee, we observed the NATs and the importers were there in the market to cover, and some sort of buying for USD INR was observed. But overall, the movement was kept in check and in a range, and that should be the case even for today. So that's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.